So hello everyone, thank you so much for joining our Hack-it activity that we organize at StartGate together every time. And now today we're gonna be talking about token economy, blockchain, and especially for the startups and how that is gonna be how that technology is going to be helpful for the startups, and in the same time, why people think that it's going to stay. Our speaker for today is Yip. She's a co-founder at Unit Network. It's a blockchain project with Substrate. It's Polkadot ecosystem. She's also a design expert and blockchain education. She's a meditation teacher and a mindfulness trainer. And also she was here at StartGate as a mentor together with Plug and Play in our second batch here at StartGate. Then before we start, I would give the floor to Yip to kickstart the keynote. And then, of course, please do not hesitate to ask any questions if you have any. We're going to be addressing that right after. And what we hope for is to have an exchange and among everyone in here today about blockchain for startups, about how the technology is useful, what it is used for, and everything. So thank you so much, Yip, for accepting our invitation. It is our pleasure to have you with us today. Again, we hope to have you soon more and more at this time physically here at StartGate. So the floor is yours. Thank you so much.
Thank you so much, Mohammed. It was really a pleasure to get to know you. And thank you very much for inviting me to share about this topic, which is actually really dear to my heart, because what I personally, and not only me, but a whole bunch of people in the ecosystem are believing is that we are at the cusp of a technological and societal revolution. So what we're talking about here is what we call the internet revolution. And maybe let me just step back and explain about the evolution of the internet, and then what we call Web 3.0, what it means, and what we can expect from it from the future. And so originally, when we think about the internet, when it was started, it was a medium of communication, actually a medium of information, right? You would log into the internet, and then you can read data. It's very unilateral. And then what happened over the past few years, and currently we're at the peak of that, is what we call the Web 2.0. And all of you know that, even myself, and we are actually using the Zoom right now, for example, which is a very good example of cloud computing, like technologies that use the internet to convey communication in real time. And we have a lot of platforms like Facebook and Instagram and all these cool messenger services that are used on the phone. So what we are actually experiencing right now is the peak of the internet Web 2.0. It's the place where we can have creator economy, where each of us, because we contribute to creating and uploading data to that cloud connected and mobile based internet, we basically contribute to what is called the creator economy. And this is really at its peak right now. And we're seeing a lot of, when you look at, and unfortunately, I cannot show you the slides right now. But typically, when you look at the biggest companies by market capitalization in the world, and one of the websites where you can do it is like 8 as the number, 8marketcap.com. And then you can see what are the top 50 kind of largest ventures by market capitalization. Number one is typically gold, right? A lot of money is invested into gold. And then you will see the top 10, probably 75 to 80% are tech companies such as Microsoft, Google, Facebook, and so on and so forth, Amazon. And these are basically the big players of this world, right? When we just measure what is the amount of capital that is locked up to represent that value. And then what we see is, wow, on place 9, typically 8 to 9 to 10, depending on the current market trends, you would see something called Bitcoin. And you'll be like, wow, how can this be such a a cryptocurrency? What is that and how is it so big? And this topic today is about blockchain, internet evolution, what we call the Web 3.0. And I'll go into depth about what that means for individual people, but also for society, for economy as a whole. And then I'll wrap up the talk speaking about the token economy, which is like one use case of what is actually this Web 3.0. So about myself, my name is Yip, And Mohammed already mentioned, I'm a co-founder at Unit. What is Unit? Unit is a layer one, what we call a layer one blockchain. And what does layer one blockchain do? Layer one blockchains are typically infrastructure blockchains. So we are in a world where we would think the internet that we know nowadays and that we are currently using was about 1995, 1997. This is how early we are in the process of what we call Web 3.0. And like I mentioned earlier, we had this internet where you could read information. Now you can write information and you can create content and upload it and share with each other. And what we are about to enter, actually, we've already entered. And it's not a small market anymore. It's a market that is around 2.2 trillion market capitalization as we're speaking today. And this is only because the cryptocurrency prices went down quite a little bit over the past few days. So it's a highly volatile market. And what this Web 3.0 does is it is a connected way where you can not only transfer information and you can not only communicate, but you can also transfer value. This is why we call it the Internet of Value. And you do that mostly via cryptocurrencies. Cryptocurrencies are cryptographically secured ways of signing transactions and sending what we would consider value through a medium of internet. And the characteristics of this Web 3.0 is typically it would be decentralized and would be peer-to-peer. Peer-to-peer meaning I send what I would consider of value electronically and directly to Mohammed. And there is not anything in the center, which is an intermediary, or if we look at the finance industry, would be represented by a bank nowadays. So from Germany, I can send money over to Mohammed and have instant settlement. So how does that actually work? So this technology that we're talking about, that is the base layer for what we call the Web 3.0, is called blockchain. And blockchain is basically a chain that consists of blocks. All right. And now everybody in the world can download this kind of blockchain on their computer. So this blockchain is basically just, if you think about it very, very simplistically, it's just kind of an Excel table, like you would have a Google Sheet or Excel, that contains a record of transactions. It's called a distributed ledger, and it's a technology. This is why actually I'm thinking it is so revolutionary, because this is not about money and speculation, but it's built on something which is a technology for distributed consensus. So what does it actually mean? So now you have this kind of Excel table where people can add rows, right? And typically it's a ledger that contains the history of all transactions of financial nature. So it says, for example, it says, okay, today we start from scratch, Genesis, 0, and we have an assigned value of, I don't know, we mint 100 tokens. Each token can have $1 in value, just for simplification. And then basically we set the first transaction where Mohammed has $100, 100 tokens, and he sends some to Yip. So now the next row is Yip basically has, let's say 10, and Mohammed has 90. So now if Yip wants to send money to a third person, yeah, then to, let's say, Alexandra, then basically Yip can only send money to Alexandra equal or less to what she possesses, right? And Mohammed the same. He can only transfer 90. Yip can transfer maximally 10. If now Yip claims that she wants to send 20 to Alexandra, this doesn't work, right? Because Yip only has 10. So she can only send less than 10. So now typically, how do you make sure now in a system where there is no central figure that actually checks all the transactions and makes sure that everybody does what they're supposed to do, in a world like, you know, where everyone has the same say to write actually to that distributed ledger? And this is what actually the first blockchain that really worked was Bitcoin. And they invented, it was not only Bitcoin, but that was the first implementation where people basically had invented a mechanism that is called consensus mechanism. Consensus as in, how do we agree on the one source of truth of who owns what in that system? Just imagine, because each of us has the right to write into that ledger, into that Excel table, whatever we want to. but then everybody in the world has the same Excel copy. So how do we make sure that only valid data is in that block, like on that blockchain, in that Excel table? And this is like a mathematical kind of invention of what the blockchain technology and game theoretical model put behind it. So now, because everyone has to keep the same version of this history or the truth, but everyone can also alter it. So, and access it and write into that Excel table. And maybe some of you have had this version conflicts and so on issues already when you try to work in your teams with your different team members. And the way to solve it is, okay, you give rewards, you link it to incentives where you say, okay, whoever wants to add some data to that Excel, and in the blockchain world, we call it to the next block. Yeah, so it's a chain with blocks added after block after block. The next block contains a collection of different transactions. And how do we make sure that this new block only contains transactions that are valid? Valid as in, for example, Yip cannot pay more than 10 to Alexandra. Mohammed cannot pay more than 90 to Alexandra because overall there's only 100. So they invented that, or introduced, not invented, it was there before, but introduced this mechanism where we say, okay, in order to write to the new blockchain, you have to put money into the system. You have to pay something. So why would then anybody pay just to write onto the ledger? Doesn't make sense, right? So people would only write if, when they write to the system, they get more out of it when they do the work, right? So what you want to get out of the system must be higher than what you put into the system as the one writing onto the blockchain. So this is an incentive system. And thereby, basically, you are asked to put up collateral, to pay, like, you know, to do some work upfront, depending on some technological implementations in the different blockchains. You have to pay upfront a fee. And then basically you have to put something onto the blockchain, you get a reward, a block reward. So you earn when you basically validate or mine a new block. So this is actually then leading to a situation where only people who know that when they put in the work will get a reward, like then they would do the work. Who do the right transactions get the reward. It's very simple because each of us in this world who participates in the blockchain ecosystem has a ledger of that history, transaction history. So when, for example, somebody puts in the wrong transaction, everybody around can say, hey, look, this actually doesn't make sense because it doesn't add up. There is not 100, but there's 110. So somebody cheated. The one who tried to add the new transaction cheated because it's a wrong transaction. And everybody would signal that. And thereby, this person who put up the collateral up front will not get the reward, but they already paid money. Right? So you can imagine nobody would do that because it's not economical for them. They would make a loss all the time. So basically, this consensus mechanism, which I explained now in very long terms, and it's actually written in 9 pages of Bitcoin white paper, is very revolutionary because what it does is, in a sense, it makes cheating the system more costly than complying with the system. This is very fundamental understanding of why blockchain technology is so revolutionary. So having said that, somebody wrote in the chat, and Mohammed, you will need to help me manage the chat.
I will moderate the chat.
When there's questions, because I cannot really see them without clicking on the phone.
I will moderate the chat. Don't worry.
Okay. Thank you so much.
No worries.
Okay. So we have different blockchains. And about 10 years ago, there was the first successfully implemented blockchain called Bitcoin. And it's now at a market cap of around $1 trillion US. It's quite huge. And that was a very, very simple blockchain that just had this kind of distributed consensus and so on, that system that I just explained to you, that it's very costly to cheat the system. Thereby, nobody would do that. And it is costly because it's very easy to verify that somebody cheated, because a lot of people across the globe have the same copy of that ledger of that Excel table on their computer, and it's very accessible. Everyone onto their computer. It takes not too much energy and not too much storage. And this is also one problem, because of that simplicity of the system, you cannot store a lot of transactions, right? It's very limited in the block size, very limited. It can only contain a number of transactions in one block. So what it means, it's kind of slow and costly to transact information on that blockchain. And the information is basically expressing who owns how much Bitcoin. So then a few years later, people obviously thought, okay, this is maybe not so much usable. It's very, very secure, because it makes sense to cheat the Bitcoin. So that's why Bitcoin is considered one of the most secure blockchains in the world. It's very, very expensive to hack it. Nearly as of now, people believe, but there's different views in the market that it's impossible to hack it. You cannot really hack it either with quantum computing or with buying a lot of capital. It's not possible to do that, but it's not so usable. The only use case is sending Bitcoin from A to B. So then a few years later, 5 years later, 2015, there was a new blockchain on the market developed by a super young guy called Vitalik Buterin. Vitalik Buterin is born something like 95. So by now he's 26 years old. And by the time he invented it, he was 21.
Wow.
Or 20, actually. And he's from Russia. And it's the second largest blockchain by market capitalization right now. It is around 500 billion in market cap. And what it does is it can have computer programs executed on it. So instead of just sending money from A to B, now what you can do is you can perform simple what-if functions. They are called smart contracts. So it's like computer programs or pieces of computer code that perform a certain transaction when certain conditions are met. So if tomorrow something happens, then da-da-da. So, and this is already a big technological evolution, because at the beginning you could only send things back and forth, and now you can create more complicated functions. This is called smart contract, and this was possible because Ethereum developed something called the Ethereum virtual machine, and have their own digital currency. And this is by now like the most, I would say, most adopted blockchain for bigger use cases. And then Ethereum was developed. Ethereum is a decentralized project, so it is a bit cumbersome and slow and so on to develop, because you could imagine when you have an organization where you don't really have an owner that makes like executive decisions of how things should work, then it's very difficult to make fast decisions, right? You might know that when you have a lot of consensus, like stakeholders to develop. But Ethereum was developed with different members of the community, and now they're gradually updating the system. So what we're expecting to see in the market is something called Ethereum 2.0, and hopefully that will be released next year, which is like a faster version of the blockchain and so on and so forth, like an updated version of the blockchain with different consensus mechanisms that would allow for more transactions to happen on that ecosystem. And then we have a new generation of blockchains, which are currently coming. And you can consider them to be next generation blockchains. They have a little bit of a compromise, for example, on security and decentralization, but they have higher performance. Performance in the blockchain world means like, more transactions per block, I would say that, and also more blocks per minute. So then basically you could imagine, okay, that solves a few problems, because if everything is forever very slow, then it's not very mainstream adoptable. So these new blockchains are called like Solana, Polkadot, Avalanche. So you might have heard these kinds of names. And they are all, when you think of it from a bird's eye perspective, it's all technology companies that are all rising up, and each has a little different use case. But right now we don't really know what is awaiting the market, what will stay and what will go away again. It's very, very, very difficult to say. And all of these blockchains are called layer one solutions. And I already mentioned in the beginning, Unit is also considered a layer one solution. And layer one solutions are infrastructure blockchains. So what does it actually mean? Infrastructure blockchain means when you think of blockchain words, they are currently like national countries. And national countries, as in like nation states, with their own currency, with their own language, with their own culture. Culture plays a big role. And they are not very compatible with each other. Like when you have Ethereum and Bitcoin are not really compatible with each other in the same way you have like dirham in Morocco, and then you have euro in Germany. And if you want to exchange the currencies, you need bridge solutions. And we are in a phase of the industry where we are equally building the infrastructure, base layer infrastructure, and needing to build the bridges so that these infrastructure blockchains can communicate with each other. And to be honest, we haven't really reached a solid state of that. So you can imagine everybody's building their own railways, but the train to go from Germany to France is not really going because France and Germany have different standards of trail tracks and so on. And then the train cannot go further. This is how early we are in the ecosystem. And what is there? What else? So now we said this is a market that is about 2.6 trillion US dollars. Yeah, I mean, I looked up what is the Moroccan GDP, and it's about 120 billion. So like just in comparison, how big is the market? And what we can see is what are the use cases for why do people lock up money into these blockchains? What are they good for? So blockchains, one is infrastructure, technology, and then you can perform certain programs, which are called decentralized applications on top of that. And these decentralized applications are typically clustered into different sub-industries. The most prevalent industry is called decentralized finance. Decentralized finance is a very big use case. Why? Because a lot of technology in the finance sector is very outdated. We call that legacy infrastructure. And all of you who've worked in banking and insurance kind of probably have known that it's very, very difficult to upgrade the base layer infrastructure. So what is happening is a lot of financial services. Yeah.
So there was a question about the revolutionization of the finance system and how blockchain is actually providing new norms and everything. But in the same time, there was a follow-up about what do you mean exactly by decentralized in that?
Okay. Decentralized meaning a lot of people in the ecosystem participate in the ecosystem. So for example, when you have a blockchain and you want to make sure that, you know, there's always one single truth, one single state of truth that is valid for the entire ecosystem, right? And the more people participate in the consensus mechanism, the more decentralized the blockchain is, so that it's very difficult to hack it. If there's only me and Mohammed, if Mohammed goes away, then basically I own the entire blockchain. I can rewrite the history as I like, right? But if there's 2,000 of us and 1,001 of us need to basically say, yes, this is the truth, then it's very difficult to hack the truth. And this is what we mean with decentralization. The more people basically have access to the consensus or the security system of the blockchain, the more you make sure that there's no one single corrupt source, or not corrupt, but like consolidated source that can rewrite the history of the blockchain and of all the transactions. Because what happened if somebody rewrote the history, it would mean that all of a sudden it's not Diep owns 10 and Mohammed owns 90, but it's like Mohammed owns 10 and Diep owns 90, because we rewrote the history and then we enforced that truth onto the entire ecosystem. But decentralization ensures that actually it's not possible to do that. And decentralization has many different implementations on different layers of the technology stack. I hope this answers, or if not, then I'm happy to clarify.
Thank you. And there is another one about in the last 2 years and even more nowadays, a new concept about cryptocurrency started to show up, play to earn games, which you might already know about. What do you think about this concept, and how can we
Yeah.
create more sustainable in economic model of those games, especially if we know most of those games fail after 2 or 3 months because of not having sustainable burning mechanism for these coins?
Oh, wow. Somebody is really an expert in that. So let me explain
And
play to earn
he's a
in a bit.
startup here at StartGate, and he has a startup in here. So that's why. So, and he's at 30, 37. So
Ah,
they're.
okay. Wow. Nice. Wow. Okay. So let me just go back to that other question, the use cases in finance. So the biggest use case currently is decentralized finance, which means we're rebuilding the financial infrastructure on the blockchain for the fact that you don't need that settlement layer in between anymore. And this, we are currently about 100 billion, of a bit more, maybe $200 billion value locked into smart contracts, like into computer software that executes certain payout mechanisms and transfer mechanisms according to event triggers. And so instead of like, you know, how would one explain decentralized finance very easily? So one very interesting use case, for example, is decentralized exchanges. So when you want to trade money, like you want to buy a cryptocurrency against another currency that you hold, typically what you nowadays do, you go to an exchange, right? And you can go to a digital exchange. Like, you know, in the cryptocurrency world, you also have the same. If you want to have US dollars and you want to convert to Bitcoin, you need to go to an exchange. And because Bitcoin is digital, to go to a digital exchange, right? Or you go to a human broker that uses technology and then sends you something. And when you use smart contracts, you can actually send money into a pool. And the pool is basically a computer program that just captures that money, and then it automatically gives you back the other money. You don't need a human person anymore. And the pool works just with computer code. So if X happens, then Y comes back. And then the mechanisms of how to make the exchange and how to price the currency is dependent on the variables that go into that smart contract and the formula, like basically, that people put behind it. And a lot of this is currently happening with like trading. So you basically automate trading in a smart contract that has predetermined payout mechanisms. And the way you basically set up decentralized finance and incentivize people to provide their liquidity so that you can trade. Yeah, because if you want to trade a token, somebody needs to do the counterparty. If I want to buy Mohammed's token against US dollar, then somebody else needs to put in Mohammed tokens into a pool. So else I cannot buy Mohammed tokens. Right? So you have to have people that provide liquidity if you are in a world where there's no central entity that provides that liquidity, like a market maker. So the way typically programs nowadays incentivize this is they give you a share when you basically provide the liquidity, either the tokens that you want to buy or the US dollars or whatever assets into the pool. Typically it's 2 pools. Then whenever a trade happens, you get a percentage of the fee. And thereby everybody wins. And this is maybe some second revolutionary concept about cryptocurrency and blockchain is you have a mechanism where you can incentivize community to contribute, and community can always get something out of it. So decentralized finance, it's starting to become a bit more complex. Now we are starting to see the birth of financial derivatives products, of insurance. There's still no really good model for blockchain-based insurance, but I'm sure a lot of people are working on it right now. Then we start to see like synthetics kind of financial instruments are being built. So everything that you see in the more structured finance capital markets products that in trading and so on that go beyond lending and borrowing are currently being built. And there's a lot of new movements and nobody really knows which ones will prevail. And then a second big use case, and this comes to the second question, is play to earn. So this year, there's been a really big hype about metaverse, NFTs, and then gaming. So gaming is a $200 billion market, and people have somehow understood that they can use these incentive mechanisms where basically you create some kind of incentive for people to do economic transactions can also be gamified. So what they did was, they invented games where people played something, and what they used as a technology is called the non-fungible token. Non-fungible token is like a cryptocurrency that only is not fungible in the sense it represents something that is not easily exchangeable with other identical assets. It's not identical with other assets. So for Bitcoin, for example, there's 21 million Bitcoins, and it doesn't matter which Bitcoin I possess. In the non-fungible token world, it does matter which NFT I possess. So this is the first characteristic. And then what happened is people deployed this use case into gaming. And traditionally in gaming, you cannot take out the in-game assets, right? Because game stores, you play something, you earn scores and credits, you can buy something in the store to dress or to boost up your avatar and your game character. But what typically happens is the centralized gaming platform, they own all this, it's not you. And in the NFT world, the blockchain-based world, you basically own that NFT, and then you can take it out of the game and you can deploy it ideally in another game and so on. So basically the user gets more power. So from just being a consumer, the user becomes an owner of a certain platform. And this has gone huge this year. And one of the biggest players, somebody mentioned it, was Axie Infinity. And they are a Vietnam kind of based team backed by some European VCs. And have made hundreds of millions of revenues. But the play to earn model in their way, I guess, was a bit screwed, because I think it's not even their fault, but they forgot basically, I guess they did not expect to have so much success for their own product and their business token economics. And this is what every person in the blockchain world needs to do. And this is where also the industry needs to evolve a lot, is to really critically think about what makes my business model sustainable. Yeah, how does my business model generate value? Until very recently, until this year, most of the projects in the market did not need to have a business model. They received funding very, very easily. That is maybe comparable to earlier in the 2000s, when a lot of money was channeled into internet companies. And then there was a crash. And then after that, the internet companies with a business model started to emerge, right? And this is something you can also see similarly in the blockchain market. So now we are getting to a point where there's still way too much money in the market, also because governments are printing a lot of money. So it's fairly easy to get money, but money is now also focused on looking into blockchain projects that have a sustainable business model. And a sustainable business model means,
Yeah, and you go ahead, finish first. Because there was a question about you mentioned talking the money and the NFT, and then there was Abla who's asking about investing in totally new NFT projects. What do you think about that?
Okay, yes. So first, before investing, I think it makes sense really to understand what one is investing in. And this, following just what I just mentioned, we really come to a place in the industry where people not just throw money into it, but they are starting to ask more and more, hey, how does this project, of which this token is a representation, generate value for the token holders, right? And in the beginning, and you saw that earlier in the year also, when we had this really big NFT hypes in March, the first biggest NFT hype was when an American artist called Beeple, who for 13 years had every day uploaded a digital arts piece. And then he made an NFT collection out of it. And it went online and it was supported by Christie's, I believe. So one of the big major auction houses for arts. And he sold it for $69 million US, this collection of digital pieces of arts. And that was the first notable big NFT win. And now we have a lot of NFT buzz. And this NFT was representative of digital arts, right? But basically what it did was it just was a digital representation of ownership, a unique ownership to a piece of digital work. And that's fairly easy to model. And now people have realized, okay, but NFT alone, like just representation of copies alone, is not good enough. So can we actually think NFT as a piece of digital assets that can be deployed in other parts? And this deployment, like using a piece of ownership, a piece of capital asset to make something out of it. This is always in capitalism, I guess, the main functionality to think about, okay, do I have a piece of asset like US dollars and put it below my pillow, or do I put it to work so that that piece of asset can generate some interest for me, some return, right? And in the NFT world, people started to realize, yeah, okay, it's not actually enough of a use case just to own a piece of digital art. Want to deploy it to generate some yields on it, some returns. And then all this gaming came up where people basically thought, okay, now I can generate some kind of asset. And in the case of Axie Infinity, it was that an NFT represented a playable character called the Axie. And these Axie had certain functions. They can breed, you can deploy them in the games to earn rewards. And these rewards are tradable. So what is also revolutionary about the cryptocurrency market is you have basically liquidity from day one. You can take out this NFT, you can bring it to a decentralized exchange, and you can trade it against cash representable assets or other digital assets, so that you can basically have a high circulation of volume around the ecosystem, which is a bit more of a fluid capital market as we know it nowadays. So what did I want to say? So NFT started to become kind of an asset of which you can generate yields. And this is what you really need to understand when you buy basically NFTs and invest. What is actually the fundamental value behind this project, this token? What does this token represent? What kind of project? Yeah, what does the team claim to sell? And how will that be sustainable? And for example, when we look at Axie Infinity's token economics, because somebody said that earlier, some of the parameters were maybe not, because we don't know in foresight. It was the first successful play to earn model, right? It's always difficult to be the first, the pioneer. And now people understood that some of the variables they put into their business modeling were maybe a bit Ponzi-ish. Like this model basically needs more users to enter into the game so that it generates enough returns. But what if you reach a level of the game or of market saturation when no new customers come into the market? Then all of a sudden it becomes not very interesting anymore for the token creation, and then the value of, I mean, it's like in the business world too. When your customer market matures, and then basically you have high competition, and then all of a sudden the returns go down. What do you do then next? And this is what we're seeing a lot in the crypto markets right now, where business models are starting to mature a little bit, and people become more critical of how will that sustain long-term value. And it's happened also with this layer one blockchains like Ethereum. People started to question very much, okay, how will Ethereum over long-term generate value for all the ones who own Ethereum to use that network? And there is until now, no very good answer to all of these questions. And the entire industry is needing to prove that they can generate cash flow over time.
Well, that's a very elaborative answer. Thank you so much. There is another one here at this time. It's about it's about the technology and more about the quantum computing. So can you elaborate more about the quantum computing? You said it cannot beat Bitcoin's cryptography, but they are thinking and designing new cryptographical methods to battle this. What do you think about quantum computing? Will it affect, especially will it affect the blockchain space, especially after security? About security in the next 5-10 years, and when quantum computing will be very feasible?
So quantum computing, from my best knowledge, I'm not an expert at all in this field. What I understand is it might have an effect on the consensus mechanism deployed in the Bitcoin network, which is called proof of work. The proof of work mechanism, like I said, people have to pay money in order to be able to add a new block to the blockchain. In the Bitcoin world, this paying money is not with real money, but you have to invest computing power. So you have to solve a lot of puzzles, like very simple puzzles, but you have to solve many of them to get a fair chance of mining the next block. And people believe that, okay, what you compete against is the speed of computation. This is why, for example, in the Bitcoin protocol, fast processing computer chips, graphic cards, are so high in demand. And with quantum computing, basically the fear was that now there is some entity that can hack this because it can create like so fast the computations all the time. And from what I understand from the community is that the Bitcoin protocol, because there were some developments in the quantum computing, they changed some parameters of the blockchain security mechanism so that it becomes right now also, again, very unlikely that a quantum computer could hack that. But like I said, I'm not very an expert in that. You hear different views. There's theoretically people can hack it, but then others in the field say, no, actually it's not hackable because quantum computing also cannot do that yet. And probably also people believe that Bitcoin is not that valuable yet that it's worth hacking it with a quantum computer, because the first use cases for quantum computing might be more lucrative business segments. This is what all I can say to it.
Thank you so much. So I think, yeah, that was the other question we have. So if any other people have any questions, go ahead. If not, we can continue with the conversation as Yip is sharing with us her expertise and knowledge about the subject. So, and that's very much appreciated. But myself, I'm not a very expert. I don't know much about blockchain. I'm discovering this as many people here today. And since we're working together with startups, how they can, from my perspective, and I have two questions. The number one is that how they can leverage the technology as startups in terms of their innovation, in terms of their technology and everything. That's number one. And the second thing, and this is again something that I don't understand, is that since it's secure, it's traceable, and the cryptocurrency is very secure, and it seems to me that it's the future, why a lot of countries are fighting it, and in terms of regulations, and it's not as popular as it can get. And you are someone who's advocating for blockchain, and you've done that for many years. So what do you think about those two things?
Okay, let me answer the first one, and then you will need to repeat the second one because I didn't understand it due to my bad internet connection. So the first question is about what can startups make out of it, right? So we have entire new industries that are emerging in that new base, on top of that new base layer tech. So everything that is application-based layer, there's a lot of room for improvement. Like I mentioned, for example, if you were in the financial industry, everything related to building insurance contracts, building financial instruments, structured financial instruments, bond markets, and so on, there's a lot of need for technological solutions to support.
Yep. Hello. Hello. We lost you for. Hello.
Of data, of consolidate data, and visually optimizing that alone is like already in the industry chains to translate different features from one blockchain to another.
Yep, we lost you for.
How can we actually use blockchain?
10-20 seconds. Hello, can you hear me? Yep, has some internet problems, so we're just gonna wait for a couple of seconds until she.
Yeah.
So she's back. So hello, we lost you for
Excellent.
about 20 seconds.
Yeah, I had to change my internet because the place where I'm at, the Wi-Fi is not so good. So I changed the Wi-Fi connection network. Sorry about that.
It's okay.
So I was saying DeFi and then bridging, right? Any kind of solution that bridges between different blockchain infrastructures. There's no good solutions in that, or a few emerging. And then use cases that basically are in identity management. This is a very good use case for blockchain. It is big and new, and a lot of investments will flow into there. Like, how do you make sure that the person, like the user that claims to be the user, is really accessing all these kinds of transactions on the blockchain? Then any kind of solution that basically improves UX and for the front end customer. Because all the solutions, if you engage in that industry, you will notice they are all like puzzle pieces that have not really been puzzled together in a smooth way when it comes to user interaction. So any kind of service that provides, like, you know, a nicer design and usability of different products is very highly appreciated at the moment. And then you have this big theme, this really, really big industry emerging, that is a metaverse. So that will be anything related to AR, VR, decentralized cloud computing, decentralized rendering of things, decentralized music streaming. Anything like this will be built and will come over the next few years. There's a lot of VC money flowing into the market. I think this year alone, there was around 30 billion US dollars, just VC investments into small cryptocurrency startups. So it's not small of a market so much, and it will grow over time. The second question, Mohammed, can you please help me again?
So the second one, it's more about cryptocurrency, since it's based on blockchain and it's secure, it's traceable, it's hard to tamper with and everything. And that's basically everything that you need for a currency. But we see that the regulations in terms of the law and the governments and everything are not very much friendly with it. Why do you think the reason why? And this is something I've always wondering, that now I will talk about country in Morocco, for example, there are no cryptocurrency friendly laws that basically it's illegal to trade in for example, Bitcoin, for example.
Yeah, I think there's different layers of complexity that add to it. One is mostly for regulators. Their job is to protect the retail investors, right? So basically, when you have a lot of technology that is coming up, where everyone can enter the market and everyone can basically do everything, it creates a lot of, like, you know, market distortion. And so the regulators want to protect the retail customers, and it's very difficult to protect them because the technology is evolving. When we say, for example, in decentralized finance, 1 day is like a week in the regular world. So like 5x speed of development, right? So it's very difficult even for people within the industry to catch up. So how can it actually be possible for regulators to catch up with all of this? So how can they actually protect retail investors in a way that they need to, like, understand the technology to be able to protect them? So a lot of legislations for the fear of, you know, not providing enough protection, provide too much protection. That stifles innovation, but it's really, really quite tough to keep up with all that is happening. You have like lending, borrowing, staking, and different wallets, hot, cold, custodial, non-custodial, and so on. And it really takes a lot of understanding of technology, but also of game theory and also macroeconomics to be able to encompass all of this that is at a rapid speed of innovation. And so I think this is one reason why sometimes the technology is a bit over-regulated, because all the brains who would understand that technology are actually busy building that technology and cashing in quite a lot rather than helping the government. Right? It's a very typical problem we see even in mature markets. so this is maybe, and the second dimension that often comes to play is a loss of power, right? Because what basically we are having in the markets is a monopoly on printing money from central governments. And now we have technology that actually takes away that power. And this is kind of a typical reaction also, like the fear of losing power for the good or for the bad. I don't even want to judge that, but it also, decentralization means actually decentralization of power. And now that in different authorities, sometimes people want to keep power for good reasons also. It's not like I'm saying there should not be centralization of powers at all. But this is what you're seeing. It's very similar to when you want to change, like, a company structure, that you always have some kind of tensions and frictions.
So is it a matter of time, or you think I'm just curious, is it just a matter of time, and we'll see, we'll probably in the future we'll deal with cryptocurrencies and more towards technology, or what do you think?
My personal view is blockchain technology is here to stay. Blockchain technology without cryptocurrency won't work because of the incentive mechanisms. And a lot of people use blockchain technologies and think it can work without this incentive mechanisms, which are embodied by cryptocurrencies, which I think is a flaw in like the logic. Maybe I'm wrong, but I would need to be proven wrong. So my personal hypothesis is you cannot think blockchain technology without cryptocurrencies. This is why we at Unit, my blockchain project where I'm a part of, we are building the token economy of the future, because we envision a world, or we will see that, we are seeing that coming, that you will have millions of tokens floating around that represent and facilitate the flow, the free flow of value, of what society and people think is valuable throughout the economy in a much more frictionless way than we have today. We're building, like, for example, infrastructure so that small cap tokens, like small projects, small medium-sized projects or enterprises, if we use today's terminology, can have access to financial means that they until now cannot have access to. Not because people have bad intentions, but because sometimes it's just not cost efficient or economical to serve small segments. We see that a lot, like, in the banking sector, it's about financial inclusion. It's not because banks don't want to serve the poor. It's just sometimes it's more costly to serve the poor than to serve them. And profitable, like profit-driven companies do have a fiduciary responsibility to serve their shareholders. Right? But when we can live in a world where all the people are shareholders too, all the stakeholders can become shareholders, then all the incentives are aligned. And this is what the promise of blockchain technology or decentralized internet technology is, that even small holders can profitably participate in that system in a frictionless way. We are still a few years, I think, away from that vision being implemented, but there's good reason to believe that this technology is here to stay, and governments will understand the power of it. And some governments already are working with Bitcoin as a legal tender. So already, for example, accepting Bitcoin as a means of payment everywhere in their jurisdiction.
Well, it's still not the case here in Morocco, and we have another question from the audience in here. And this time, this time it's about startups. It said you talked about smart contracts before. So how can we use the smart contracts to help the entrepreneurs raise funding for their startups? Maybe some use cases would be helpful.
A token typically is a smart contract. So when you basically issue a token, you create a smart contract that has certain parameters. That says, for example, I want to have a fixed token supply of 100 tokens, and each token should be sold at $1 if it's bought from my entity, right? So this is a piece of code that you write, and it can be deployed on the blockchain. So you basically compile the code, and then you upload it to the blockchain. And the blockchain, again, is not one program, but it's a program that is maintained by many different computers in the node that is accessible to everyone. So as a startup, you can write smart contracts to issue your own tokens, and thereby everyone could, in theory, buy your tokens. The problem is not really to issue a token. That is like 5 minutes. That you can even, there's like, just in the way, now you have WordPress website builders. You don't need to code HTML anymore to write your own website. You just use WordPress or any other website builder, and then you have no code solutions. But so everyone can actually issue a token. But the more difficult thing is to understand, how can I now get liquidity for my token? Because like I said, it's very similar to if you issue shares for a company, for example. Issuing the shares is not a problem, but how do you find the buyers? And how to find the buyers is an art in itself. Right now, we're seeing, like, of course, you need good networks so that people know your community. They trust you as founders, so they can channel you money. There's different platforms that help to promote you. You can hire marketing, PR agencies that kind of, we call in the crypto space, we call it to shill a project. There's different Telegram groups and so on. You can be listed on certain exchanges. So it's an entire industry behind it if you want to gain liquidity. But really what is, I guess, the first question is always, how does this token or my business make money? When you have fixed that, it's easy to translate all of that into the token world, because in effect, it's just an evolution of existing capital fundraising models. It's just a bit more liquid market. Because how does an investor nowadays make money when they invest into you, right? They have to wait until you exit, or you find a secondary buyer of your shares in a not very liquid market, or you go IPO, or you go to a next funding round, so then they can sell off their shares. But it's not very liquid, right? And the horizons for you to go liquid or go IPO is typically 5 to 7 years. So an investor that invests nowadays into you has a very long waiting period, and that is cost of capital that they have. And the token world, theoretically, if they don't have vest or cliff period, and if you're listed on a decentralized exchange, that means you've set up a liquidity pool and somebody put in funds so that your token is tradable, you can be liquid from tomorrow. But just how do you get up this capital to create liquidity is a question. And there's different mechanisms to it too, but that is like an art in itself. So you need to do a little bit of research.
Maybe we can host you for another conversation about that. And I did not realize that 1 hour went very, very quickly while listening to you and discussing with you. And that's a great pleasure. Thank you so much. So we have one last question from the audience, and then I would give you the floor to close to not take more of your time. And that's very much appreciated. So he says, as a developer, how can I start to create my first smart contract and link it to the front app? So that's the...
Oh, wow. Yes, I love that you have the guys from 1337. Actually, after visiting Morocco, I went to Lisbon, and then I met with École 42 and having discussions of how we can bring blockchain into their curriculum. And there's already a worldwide initiative that will include...
We can discuss that with 1337 here as well. That's something definitely that we can introduce and start the conversation.
That would be amazing. So the best way, for example, you have free smart contract platforms that have all the templates. It's called Open Zeppelin. In the blockchain world, the beautiful thing is most of the things, 95% of the things are open source. So you can just copy ready-made and test it, like, smart contracts, and deploy them to your own use case. So that has all the free resources. And obviously, the biggest risk in these smart contracts is when you make an error in coding and then people exploit it. And because smart contracts typically contain a lot of value, they are very vulnerable to hackers because there's money to be gained to hack that, right? So it's always advisable to use ready-made contracts. And then if you really deal with larger amounts of money, to have a security firm audit the contract.
Well, thank you so much, Yip, for your time, for your the speech, for everything that you've done. It's very appreciated. I would give you a couple of minutes if you wanna close the conversation with a couple of remarks, anything you want to say. Thank you so much, and then we would call it for today. In the hopes of hosting you another time, and probably this time physically for another workshop, maybe not just a keynote, because I learned a lot, and I think the audience as well, and I've seen that from the questions we have and the interactions we have. So yeah, thank you so much for your time and for your everything you've done.
Yeah, thank you all so much for contributing to this discussion and sharing your Friday afternoon with me. It's highly appreciated. And maybe what I think we should take away from this session is, one is blockchain is here to stay. Blockchain without cryptocurrencies won't work so much. Second is, before you do an investment or set up your token or whatever, try to understand how is your business making money, or how is this project that you are investing in generating money. And the third part is really, you are so early in the market. We are, when you look at the blockchain industry, we are probably, as a human being, we are probably in a stage where we just learned crawling, like a human baby would just learn crawling. So there's so much opportunity to seize, and everyone is super welcome to join, to contribute, to shape that industry that will affect billions of people in this world within the next decade. So thank you very much. And January 17, I'm starting my next cohort of 6 weeks free blockchain literacy program. So it's 6 weeks, you can join, it doesn't cost you anything. There's live sessions, it's called Unit Masters, and the website is unitmasters.org. And yeah, anybody welcome to come. It's not technical, it's for non-techies to understand societal and revolutionary aspects of this new technology.
Thank you so much. You probably can send us the details of it. I would definitely share it with everyone who's here today and with the startups and everyone we have from our community. So thank you so much for your insight, for your keynote, for everything, for the information you shared today. We learned a lot. A question about the name of the website, we'll share that with you, Abla, like via email. I send you the website of the Unit Network. But on these notes, thank you so much for your time, and thank you to our audience for being here today, and see you soon. See you in the next one. Thank you so much.
Thank you.
Thank you so much.
Bye-bye.
Bye.